2025, I think it's fair to say it was quite a tough year for sustainable funds. We saw $84 billion flow out of sustainable funds. And that was a first for the European market as well, which is like the biggest market in terms of number of funds and assets. And so to give listeners a rough idea, in 2024, there were $38 billion of inflows. And at their very peak in 2021, there was more than $600 billion of dollars flowing into these funds. So yeah, there's been a sharp decline, I think, since 2022. And then that's kind of been steadily ongoing 2023, 2024. We still saw inflows, but 2025 was the first year of outflows for global markets. As I said, Europe had only seen inflows up until last year. It's a very different story for US funds, which are into their fourth year of outflows. But the data is out for the first quarter of this year, and it's looking a bit more positive, I guess, for the European market at least. It's seen just over $9 billion dollars of inflows. But yeah, the trend for the US, as I said, and also the rest of the world is still negative for now.
And what's been causing this? I mean, you said in the US the outflows have been for the last 4 years, so I presume it's not just the Trump effect. There are other factors behind it as to why we're seeing this negative trend.
Yeah, definitely. There are lots of factors behind it. Of course, global markets on the whole have been pretty rocked by the ongoing geopolitical tensions. There are obviously the strong kind of anti-ESG sentiment in the US pre-Trump and post-Trump has definitely not helped. Then there's ongoing regulatory volatility in the EU, and these funds have also seen kind of mixed performance. So all of that, I think, has kind of combined to, yeah, impact investor appetite for these funds.